In this video, we're going to look at material costs and related documents for a manufacturer. When a company receives the raw materials they've ordered from a vendor, the company's personnel will inspect the shipment, will count how much material was received, and fill that information in a form called Receiving Report. So Receiving Report is a form that records the quantity and cost of items when materials are delivered by vendors. The material ledger cards is another form that they use, and materials ledger cards are updated whenever the company receives materials to show how much materials the company has on hand. The receiving reports that we talked about in the last slides are used to update the material ledger cards. The ledger cards look like this. Every material used by the company will have its own material ledger card. So this is the materials ledger card for the alarm systems. The ledger card shows all the information that you need to find about the alarm system. The alarm system has a stock number, M3, that's assigned to it. The stock number is unique for each item of inventory they carry. There is a location in the storeroom, so this is located in bin 7. They have a maximum quantity they should have on hand and a minimum quantity they should have on hand. Once they reach either the minimum quantity or close to the minimum quantity, they need to reorder, and it shows how much quantity of items they need to reorder. It also shows the items received, the items issued, and how much are remaining in balance. The items received are updated using the receiving reports that we talked about earlier. The items that are issued are going to be based on requisition numbers, which we're going to talk about next. And then it calculates the remaining balance. So at the end of the period, it shows that there are 2 units of alarm systems remaining and the total price, the unit price and the total price. Now let's look at requisitions. A material requisition is a form that the production department fills out whenever they need materials to start production. The material requisitions are filled out whenever the production department needs material. It's not that they fill out, let's say that they're going to run a batch of 1,000 units. They're not going to fill out all the production requests at the time. If they need 10 items today, they'll just fill that out and the warehouse will send it to them. And then tomorrow, whatever they need, they'll fill out another material requisition and so on. So if you look at the material requisitions, there are different items that are requested on each material requisition. The material requisitions are serially numbered, and that is in accounting. All documents and all forms are serially numbered. And then it shows who filled it out, who requested it, and so on. Whenever a material requisition is filled out, materials are physically moved from wherever they're stored to the production floor. So you're also going to see a journal entry that takes place where goods are transferred from raw materials inventory to work in process inventory. These requisitions are filled out whether the production floor is requesting direct materials or indirect materials. Every time they need materials, whether it's direct or indirect, they will fill out a materials requisition. This next slide shows the cost flow and documents for materials. Whenever companies receive materials, the company fills out receiving reports. Those are used to update the material ledger cards. Then every time the production floor needs materials, they're going to fill out requisition forms. If the material is a direct material, the direct material cost gets updated in the job cost sheets. If the material is an indirect material, those will get recorded in a place called the factory overhead ledger. Now let's look at the journal entries that get accompanied with these transactions. whenever the company purchases materials, they're going to debit the raw materials inventory account, so it increases the raw materials inventory account, and then they're going to credit accounts payable or cash depending on whether they're buying on account or they're paying with cash. Let's go to Excel and see how this transaction looks like in T accounts. We're going to use this spreadsheet to look at all the job costing journal entries through different videos, but whenever we said company purchases materials, they're going to debit raw materials inventory and credit accounts payable. So let's go ahead and fill that out. I'm going to fill out all my inventory accounts here. So this is raw materials. And whenever they purchase raw materials, they're going to, so I'll just say purchases, increase raw material inventory account and credit accounts payable or cash. We'll just say accounts payable. That shows how much they owe for purchasing raw materials. That was buying raw materials. Now let's look at when raw materials are used. Remember, we said raw materials can be used as direct materials or indirect materials, and the journal entries are different depending on what type they are. If it's a direct material, we're going to debit work in process inventory and credit the raw material inventory account. If the materials used are indirect materials, they're going to debit the factory overhead account and credit raw materials inventory. Let's take a look at that in Excel. So first we're going to look at the requisition of direct materials. For direct materials, and I'll put that in a different color, they're going to credit direct materials. So this is direct materials used. Whenever direct materials are used, they're going to credit raw materials inventory and debit work in process inventory. So I'm going to debit this here for direct materials used. And then let's put a header in that. This is work in process inventory. You know that the material flow goes from raw materials inventory to work in process inventory, then to finished goods inventory, and then when finished goods are sold, it goes to cost of goods sold. So as we complete these journal entries, you'll see that flow of materials. Now let's look at using indirect materials. When indirect materials are used, the company's still going to credit the raw materials inventory account. So this is for indirect materials used. But they're going to debit factory overhead. So I'm going to show the factory overhead account here. And I'm going to debit indirect materials used. And then let's label that as factory overhead account. Follow along with every video on all the journal entries and go step by step and redo it on your own on a separate piece of paper. That will help you understand the different entries rather than just looking at what I did. That's it for this video. In the next set of videos, I'm going to talk about labor costs.